Right, good morning, everybody, and welcome again from myself, Ian Giffen. So this is just for members, and as a result, I'm going to chat in a little bit more detail about a couple of things. One of which is just to speak a little bit more about our overlay strategy that we've been working on, and hopefully you're going to find that useful, just to help you get thinking about what we're doing with the overlay strategies. And maybe you could try a couple of things as well, just get to help you get going with it. Obviously, to be followed by more in-depth training. So before I do get going, if there's any specific instruments you want me to check out, please feel free to drop into the chat box, which I should open right now. Or if you're watching this as a recording, of course, then please do drop your question into the comments below. So I'm going to be focusing again primarily just on the currencies, not going into indices and so on. Part of the reason for that is, especially for the evaluation account, on the funded account that many of you guys are going for, it's really just the 28 currency pairs. So only once you get to the portfolio manager level, after having passed the very easy evaluation test, do you look at any other instruments. So we're going to focus on those. I'll have a look at maybe and a couple of others. All right, so let's jump into it. As always, starting with Euro USD. Uh, Before I do that, let me just point out that I think that the overall theme at the moment has been relatively flat, with the exception of yen weakness showing itself last week, which got us into a couple of trending trades, which we'll look at. But mostly it's been pretty sideways, as I'm sure you'll agree with me. And the euro is an example of that. So, on weekly, however, we recognize we're still in that retracement wave of that bullish trend, which has gone very flat. We saw the bearish trend line being broken, which we discussed before. And as you can see, we've now had a double bottom, which has led us to jump into another overlay. So I'll talk about that in more detail in a minute. So we're just looking at long trades here, bouncing off of the support level, but very little happened towards the end of last week anyway. So we're just going to have to wait and see what happens there. In fact, I'd say across the board with these dollar pairs with the majors and the minors, relatively flat. The same thing on the pound. We've got that very gentle upwards. As I say, technically it's not, it is a trend, but it's so gentle on the weekly time frame. And that cyclicity reflecting itself here on daily has also gone completely flat last week. So not really paying, or doing much with that at all. Although there is the potential, obviously, for bearish overlays on this one. Right, so looking at that yen weakness, first of all, here on USD JPY, we had the breakout on Friday. So if you are trading the H4 impulse, then if we do get an impulse candle at the end of this one, I'd still go for it. I know sort of time-wise that's midday, which is pushing it a little bit if you're going with that rule. But yeah, I mean, we're looking at the end of this downswing potentially. So even if that's the wrong time, I'd still pretty much be looking to go for that. Remember, this is not about making sure that we actually get winners, because we can't do that. It's about positioning yourself appropriately. And we might lose on this, obviously, but that's a nice bullish breakout. So on the weekly time frame, obviously, we're still looking at very much quite a deep channel over here. It's bounced off of that support level. We've had a reversal with the higher low, and that has also allowed me, even on the weekly time frame, to look at an overlay over here. So let me just chat about that quickly. The principle is very simple. It's really about looking to trade initially and primarily if we have a breakdown in cyclicity. So if you're trading, let's say, a bearish trend, and you're going to be in bearish trades all the way. If that bearish trend breaks down and you have any kind of a reversal, you're likely going to get stopped out for a loser, or maybe at break even. But assuming that you've had a loser, if you have a breakdown in cyclicity, and certainly here you can see that the bearish cyclicity, such as it was, broke down. We had this phase two, followed by a bullish impulse candle. But even without that being an impulse candle, showing us that this next wave has started, the previous wave had ended, it means that basically now we're looking to trade this for an overlay in a bullish direction. So you have to have quite deep pockets, obviously, if you're trading these on the weekly, and be pretty patient. But it did allow us to have a look at that. So if you were trading the overlay, literally it's when you get the start of the next wave, stop below the start of the wave, and it's a 1-to-1 initial reward to risk ratio. But that's just the start of it. I will show you how we manage the trade in a couple of older examples in a minute. So yeah, that weakness definitely showing itself. I think there's potential for an H4 impulse on many of these yen pairs. Just be careful that you don't overexpose. Right, dollar Swiss, likewise, not really interesting at all. We've got a current overlay running on this one just to show you how we manage it now. So you'll see that we had the breakdown in cyclicity. This bearish, this low over here, this wave was not an impulse wave or phase one wave, because we did not get any close below the preceding low. That's also an open, and even that was above that level. So this is a phase two wave, which is something a lot of people struggle with, even though it made a lower low. It did not make a lower low, lower close. So phase two, breakdown in cyclicity. And as soon as we had, for want of a better word, confirmation that we were into a potential bullish wave, we were able to look to enter after the close of this candle, which we did here, with our initial stop below the start of that bullish wave. Then we trail the stop basically below the preceding low, less 10% of the spread on that, beg your pardon, of the ATR on that time frame, which actually allowed us to remain in this trade when it tested that low a couple of times in a row. And the trailing of the stop, however, we haven't been able to do any more with it, simply because these lows have continued to be at pretty much the same level. But when you do reduce your risk on a trade, you reduce your target proportionally. Now, what we're testing at the moment is just a 1-to-1 proportion. That's a good starting point. So if you are able to reduce, let's say, your stop from, let's say, 200 pips to 100 pips, your initial take profit would have also been 200 pips. You reduce that also to 100 pips. So this is not a strategy that is designed to have high reward to risk ratios. It's not even necessarily designed to be profitable. It's not designed to lose. It's just simply designed to make money when your core strategy is losing money. So it's not going to make a lot, or even necessarily any. It will lose when you have resumption of trends and things like that, but that's also when you start making money on your core strategy. So that's just an initial, and it's quite an important advantage, I think, in the strategy. Is probably one of it's probably the most important element of the strategy is bringing your take profit closer as you are bringing your stop closer as well. But what's nice about it as well is, should you bring your stop close, and by bringing your take profit closer, you actually go beyond where current market price is, you simply close it out at the current market price at the start of the next candle. So that's quite nice in terms of helping us to maintain a slightly better than 1-to-1 reward to risk ratio over the long term. So you'll see how that pans out when you actually trade it. But anyway, I'm just trying to give you guys an intro to it here. All right, so that's dollar Swiss. Interesting that we had that reversal there. But yeah, you can see on the daily time frame, there's not much happening here. In fact, what this does illustrate, however, is the principle I've just mentioned. We were able to trail the stop on this bearish overlay on this one, where trading the stop above the last candle high. We did that at the end of this day, or the start of the following day, and you can actually see that the start of the following day there was a bit of a gap. But because if we had tried to, let me just copy this. move the take profit to the proportional level, well, the market was way beyond that anyway. So we were able to actually close that out with quite a lot more profit than what you would have expected with a maintaining a one-to-one reward to risk ratio as the trade progresses, as you manage that trade. Remember, trade management is the third step after selection and timing. All right. So dollar Swiss, let me move on. USD Cad, this was another one that just managed to survive, and another overlay where we actually had, I think we had a loser. That's right. We had the initial overlay was a losing trade, a very small loser. As you can see, we were able to trail the stock almost to break even. It did get stopped out, but likewise, we had this breakdown in cyclicity again. Went for another bullish trade over here, and that one actually hit its take profit on that day over there. So interesting stuff happening. You can see that it's been bouncing along on the support level, and now we've got a bullish impulse wave as well. So certainly, despite the fact that on the weekly time frame it looks pretty bearish, it's I think it's pretty much testing or going to be testing the dynamic resistance level of the bearish trend line on this. But regardless of that, we're actually in a bullish wave here at the moment. I do think as well, if I remember correctly, that this was in fact also not an impulse or phase one wave. The close on this is 95.8, and the low here was 87.5. Yes, so this was also not an impulse wave. So here we have phase two, and that's why we've also got an overlay, which has in fact been would have been entered this morning, being Monday. So here you can see initial stop. Let me just make that a bit bigger. Initial stop would be just below the low of the start of this bullish wave. 1-to-1 initial reward to risk ratio. Let's see where that goes. All right. Aussie, go to weekly quickly again. You can see we, as with many of these, we're in a bearish retracement wave on the higher time frame. So waiting to see if this bearish wave comes to an end, which will set us up potentially, as long as it stays strong, which it managed to do through the course of last week, but it did. It closed above the previous wave high. That means we still potentially could maybe next week have a bullish daily impulse. So, but you can see here on the daily time frame as well, still bearish cyclicity weak, though it may be. Yeah, not much happening here at all. And also, the only thing we've had here are two bearish overlays, one of which was a small loser, one of which was a slightly bigger winner. Okay, last of the dollar pairs, even flatter than Aussie is the Kiwi here on daily. Likewise, this I'm not sure we're going to actually include this in the rules for the impulse. So I beg your pardon for the overlay, but that's an example that we'll use in more detailed teaching. But you can see that the bearish cyclicity over here is broken down, such as it was, very much in a flat phase two on this time frame. Technically speaking, of course, we are in a bullish wave on weekly, but it did show weakness. So we had the inside close. So also, if you're trading that W pattern, then obviously that's not going to allow you to do anything because this is not a valid C close. For it to have been a valid C close, it would have needed to have been above X. Right, so moving on now to the yen pairs. Here we had an overlay. You see that breakdown and bearish cyclicity and the bounce off of the support level. That was a very quick trade last week. Went straight to profit on the day after, well, on the same day that we actually entered the trade, and it's gone quite a bit further. But nothing really else for us to look at here. The weekly just didn't manage to close outside. So if it does, we'd certainly be looking to trade this. This is, in fact, a potential valid. I should have updated this. Don't know why I haven't. Beg your pardon. Let me just get rid of fibs. We don't need those. It is on weekly a valid W pattern, if that's what you're looking to do. Almost, not quite. Still down here. So yeah, if you are just trading that heuristic, bearing in mind that this resistance level hasn't yet been broken, then you could certainly look to as you know, I prefer to wait for the pullback, and if we get a bullish impulse candle, that would be a daily impulse. Right, so this one is showing a lot more strength. We actually had an H4 impulse on this. Before I get to that, though, you'll notice that our bearish overlay on this, in fact, got stopped out for a loser in kind of preparation, if you like, for this bullish breakout. So there's an example, a textbook example, if you like, not that it's always textbook, where we were trading the overlay, and you can see we had a breakdown in the bullish cyclicity. So we were able to grab that. It was a bit of an aggressive one, just looking for a high test. Maybe we won't be trading it like that in the future. But nevertheless, there we had it, and the overlay got stopped out. But it gave us the opportunity to jump into an H4 impulse pretty quickly. And I think, what was that, on the 28th? Yeah, Thursday. That went to take profit on Friday. And this morning, as you can see, of course, we've got another impulse candle showing nice bullish tendencies over here. So we're into this already. And should we get a higher close here in an hour and 45 minutes, we'll be able to trail the stop to below the lowest. Beg your pardon, I'm thinking daily impulse. Not quite there yet. We'll be using the 3-6 trailing stop rule for the H4 impulse. So yeah, that's looking promising. We've also had the breakout on weekly. So once again, I prefer to wait for the pullback and then another impulse candle. If you're going for it immediately, that means that you would have actually gone for your bullish daily impulse this morning. So with that, the breakout on and the close on Friday outside of the channel. So yeah, daily impulse setup on this one as well, which of course is to be expected with this yen weakness. Now, on the Swiss yen, we didn't see an outside close, interestingly. So the Swiss franc, also one of the weaker currencies at the moment. And here you can see on the weekly time frame as well how it tested that resistance level but failed to break through, like we've seen on some of the other yen pairs. Even on the daily, it failed to close outside of the channel. So an example here of where if we do get a bearish wave coming through on this one on the daily time frame, then that would be a setup for another short overlay, similar to what we had before over here. So maybe a little bit more obvious though as a setup. All right. So with this yen weakness though, I'm not exactly holding my breath for that one. Muna, GBP yen, let me just go back to that. It wasn't a short trade. We long on this. If you're talking about this area over here, well, that bullish candle came after we were actually in the trade. So we entered at the close of this bearish high test. So that bullish candle, I'm assuming that's what you're referring to, is that only happened after we were already in the trade. So hindsight is always wonderful. Is that the one? Just confirm if I answered your question. But while you do that, let's go on to CAD Yen here again. You can see that we've cool. Okay, great. On the weekly, we're still sitting outside. Again, I actually haven't updated this. I beg your pardon. So I'm sure you guys can see we've actually moved on with a bearish wave, making that lower low, isolating that high last week. So in actual fact, what that means, of course, is that our resistance level has come up to that. So bouncing along this resistance level, nothing for us to do over there. What you could do, however, and again, here, if you're asking about bullish candles, technically, if this is the start of a bearish wave, you might ask, is that not a setup for an overlay? Well, coming back to Muna's point is, for an overlay, you don't want to be taking the trade with a bullish candle if you're going bearish. So it's a very valid point. We'd want to have at least a bearish candle, preferably a high test. That certainly would help with that. We do have a high test there, but in the same vein as that previous question, that is a bullish candle, and one wouldn't want to take a bearish trade for an overlay specifically on that. Here you can see on the daily time frame testing that resistance level. Well, let's wait and see. Nothing to do at the moment. Right, a bit of bouncing around. So obviously today's candle hasn't yet closed, so we haven't taken that into account. But what we did have is a test of the support level of our channel on, that was Thursday, with a bullish candle. Having said that, it wasn't yet the end of that bearish wave. This low was not isolated. So because the low wasn't isolated, we had to wait another day. Friday did isolate that low. And as a result, we had exactly the right kind of scenario for a bullish overlay. So that means we would have actually entered this morning. So you can see the entry on the open of the candle with a stop below the low, 1-to-1 initial reward to risk ratio. So let's see what happens with that. Should this trade survive the day, at the end of today's trading day, we will be trading the stop to below the low of today's candle. So at the same time then, remember you need to use 10% of the, we're just testing at the moment with 10% of the daily ATR. However, that would then be a proportional target, I'm sure you'd agree with me, based on what we discussed just now. So a very tight target, but if the candle's closed up here somewhere, you simply close out the trade. Done. Sorted. Pretty straightforward. Hopefully that's starting to make sense now. So trade management on the overlay, obviously key, very key. But then it isn't it always. So all right, so that's the Aussie yen. Likewise here, you can see we've got this interesting scenario where we're still in a bullish trend. Technically, it's a bearish retracement of the bullish trend. Interested to see what happens here. But you can see with this cyclicity, very flat cyclicity that we have on the daily time frame, we're still very much in that consolidation phase of that trend. The markets looks like it's just waiting on many of these. Right, so on the Kiwi Yen, it's tested that resistance level. Likewise, you can see with, that's the wrong time frame, I beg your pardon. Let's just go to weekly. Here we have a slightly different scenario where we did in fact have the end of that bearish retracement. Friday's candle isolating the preceding low, nice bullish candle, even if it's not an impulse, it doesn't matter. So confirmation that we are technically back into the next phase one, even though it's only a potential phase one at this stage of this bullish trend. It's strong as well, so it's also a valid W pattern for you guys who are trading that approach, which means we drop down to the lower time frame and look for our entry. So those entry criteria were in fact met this morning, and as a result, you could and should have, let me just check these numbers, gone for your daily impulse. Let me just change this so it looks a little bit neater. Daily impulse on this, let's just double check. Actually, I think I did illustrate it here. I don't know why I'm doing it there. There we go. All right, so with this daily impulse, the preceding low is a little bit too far, so we have to use our 2/3 of ATR. So there it is. Hopefully that should be pretty straightforward for you guys, experienced impulse traders as you are. It's a pretty obvious setup for this morning. So let me just also point out that should we get this higher close at the end of today, we'll immediately be able to trail our stop using the 2-5-step rule to below Friday's low. Right, that's the end of the yen crosses. Looking at the euro, GBP, it's been pouncing around a little bit, but it looks like this bearish action is starting to show itself again. Technically as well, this bearish wave was not an impulse wave, simply because we did not get a lower low, lower close. And even in this candle over here also did not close below the preceding low. So let's see what happens today. Perhaps we're going to get a bearish breakout on this one. Yeah, we did have, actually, no, that's not a good example. That was part of our testing, which is no longer part of the rules. Okay, let's move on to my least favorite currency pair, which is the Euro Swiss. So here you can see that Swiss franc weakness showing itself a bit against the euro. Not that the euro is very strong either. And by the way, that's one of the things that I actually want to do in our training going forward. We will put it into a new poll just to get you guys your preference for the training for this week on Thursday. One of which will be how to measure strength and weakness across all of the currencies. So in any case, you could see with that strong bullish impulse candle on Friday showing that even the Swiss franc showing its weakness against the euro. This is not something that I typically look to trade, however, as you guys should know by now, but it certainly is useful. Having said that, on the weekly time frame, we did have the retest of the resistance level at the top of our channel some time ago. So if you were trading the overlay on weekly, then once we had the confirmation that this bullish wave was over, which was when that high was isolated at the close of this week, and in fact the open of the next week was where you would have shorted this market for an overlay. Stop above the start of the wave, 1-to-1 initial reward to risk ratio. And in this instance, it actually went straight to the take profit during the course of that candle. So that would have been a nice winner. Right. So even on the Euro Swiss, Euro Cad, also one of my least favorite pairs, simply because I really have struggled to make money out of this in the past. Weekly, you can see, however, that had you followed the overlay strategy rules, although I must say that I've changed the rules a little bit since I drew these diagrams. In any case, you would potentially be in a bullish overlay on this right now. So you can see it's still inside of the channel. The test of the support level over there failed, so it's still inside the channel. And on the daily time frame, there have been a number of opportunities, in fact, with an overlay. So where we had a bearish phase one, bullish phase one, clear breakdown of the bearish cyclicity, you could have jumped in immediately, in fact, on the open of the following candle. So that would have led to a loser on the first one. If you'd gone again, however, the next trade would, in fact, have been an immediate winner. So one loser, one winner, but the winner would have been a full 1%, assuming you were risking 1% per trade, whereas the other one only lost about a third. So you would have been up about 2/3. Again, we'll come back to the training on that specifically for our members in the next week or so. Okay, so Euro Aussie, again, this is a bullish retracement. So there's no trending trades for us on the daily time frame, obviously. Still very much inside of that channel. And this certainly was also where we had the phase two, the breakdown of that. This was a bullish trade. This is a one where we actually took a trade here with just testing the inside bar dynamics of this. That's still something where the jury is out. But as you guys know, when we have an inside bar or inside candle, we treat it as if the conditions are appropriate for the particular strategy that we're trading as a rule. So in this case, that means we would have actually gone long at the open of this, and that went straight to take profit. So it was careful about our selection bias and not just recognizing the winning trades. So just got to watch out for that. But it seems to be fine. It does seem to be doing pretty well. Okay, so last of the Euro crosses, again here on weekly, you can see how really the support level is just has held. So nothing much happening. So if looking at this on the daily time frame, likewise, we had a false breakout over here during the course of last week, Tuesday, I think it was. Yes, Tuesday. And that immediately reversed on us. I think we might have had, I just want to double check, would have been on that day. So yeah, this was a loser for an H4 impulse. It got stopped out like almost immediately with that very horrible reversal. So a nice setup candle here to short the market. for an H4 impulse, which, yeah, it didn't work. Clearly not. So interesting one, that with the breakdown in cyclicity over here, we've actually seen that's a phase one, phase two. If we do get this confirmed at the end of today, where we have this low isolated, then tomorrow morning this would certainly be another bullish overlay. All right, so a loser on that, on the H4 impulse, but potentially a setup to go long. But let's wait and see. We've had this is still showing itself as being a bearish candle. We won't know until the day is done. Right, GBP Swiss. And here you can see, I didn't know this, okay, we're only looking at this now this morning. Certainly as of Friday, it had failed, I think, to break out. I'm reasonably certain that Friday's close was still inside of our channel for the, actually, if we're looking at the 4-wave channel, that is an outside close. I do beg your pardon. So that would technically therefore be a breakout. It's just, as you can see, that's the top of our 4-wave channel, just closing outside. But had there been a chance to, yes, indeed, bullish impulse candle. Let's see what times we're looking at here. This is the first candle of the day. So yeah, at 4 a.m. this morning, this was certainly an opportunity to go long on an H4 impulse. I'm sure our software would have picked that up as well. So, oops. Let's just double check this. We're looking at too many things on the screen. Right, 81 pips ATR. So 60 minus 6, it's 54 pips max stop. On this, let's draw that in. Yep, no problem on that. So we'd have been able to set our stop below the low of the candle, because that's showing itself as a potential isolated low once it opens. And 81. I'm sure you guys trading the H4 impulse would have spotted this. So plus the spread, of course. Don't forget that. Right, so there you go. Bob's your uncle. You guys should be into your H4 impulse here. Not too shabby. And yeah, as you can see, if this does continue through the course of the week, pound, I think, showing itself to be the strongest currency, certainly by far. That's why we see that GBP yen with a yen weakness and the pound strength towards the end of last week. That's still showing itself. So we may well get a bullish breakout on GBP Swiss on the weekly time frame. Okay, so GBP Cads, look at weekly first test, as you can see again, with that pound strength last week. On the daily time frame, we did get the breakout. So let me just double check here. Yeah, so because we don't have any conditions being met for trending on the weekly time frame, we wouldn't have done anything here for daily impulse. But certainly once you had the breakout here on Wednesday, we had an H4 impulse. So depending on how you would have done it, you should have entered somewhere around here on the 28th on. So that would have been Thursday morning. Plenty of opportunity to go long. And that should certainly have been a winner on the H4 impulse. It obviously rolled over on Friday. It looks like it would have just hit the take profit. Right, so you can see how Friday's retracement over here bounced off of that support level on daily. And with this GBP strength showing itself this morning, we may well find ourselves with a single candle wave if it isolates this low and continues going up. Even if this is an inside bar, then certainly for tomorrow, we'd be looking at trading H4 impulse again. Right, GBP Aussie, interesting. So again, I think our close just wasn't successful, 24.4 against the high. Yeah, just failed to close outside of that, but of course it has been outside of our 4-wave channel. Certainly since we had this high isolated, which was actually only on Friday. So looking at that, therefore, we've got this gap over the weekend. Interesting. Let's see what happens today. But if it does continue in this vein, then it certainly will mean that we are back into a bullish impulse wave on this, which again will give you opportunities for H4 impulse. So just be careful not to overexpose to the pound if you're doing that across multiple different instruments. Okay, don't want to run out of time, so let's just have a quick look at these. Overlay here on GBP NZD inside of the channel on daily, certainly flat on weekly. CAD Swiss moving out of the GBP crosses. Likewise, we've only looked at overlays on this, ended up having a really small winner last week. Nothing really interesting happening here. You can see how it's continued to test that resistance level and failed that test each time. If this was a bearish overlay on weekly as well. What's not showing here is that the stop would have been trailed to just above the high, 10% of the ATR on this time frame, and likewise our take profit would have done the same. So just to quickly illustrate that, it would look something like that, making sure that the take profit is proportional to the stop. So don't think that would have hit take profit this morning. I'm not sure about that, but in any case, you can see how we managed the downside very aggressively, although it is limiting upside as well as an overlay. All right, so Aussie Swiss, likewise, there was just an overlay and nothing else really to be done. That overlay was pretty obvious as well because it was a nice double top. And looking for potentially bullish trades here, maybe next week if we do get an end to the retracement on the weekly time frame. And Aussie Cad, similar picture. You can see that there's quite a lot of correlation across these, but certainly on the daily time frame, you can see that we're still very much inside of the retracement wave for the weekly. Right, just updating the data here. Aussie NZD, you can see we've got this long protracted bearish wave. In fact, Friday it confirmed itself as a bearish impulse wave. So we've got impulse, complete breakdown there. Long extended waves on that time frame. This was that's actually out of date. So some of my diagrams are not relevant to what I'm trying to teach you guys. Kiwi Swiss, similar picture. You'll see on weekly that we are technically, however, and again, I should have updated this over the weekend, technically back into the next impulse wave of, but what is a weak trend. So you'll notice that we have been closing inside previous price territory. So it's not a valid W pattern either if you're trading purely for strength. However, if you're going for that outside close, that means that you would, this morning, in fact, be into a bullish daily impulse if that conforms to your rule set. And I don't see anything wrong with that, the way the market's going, obviously. So that's Kiwi Swiss. And last currency pair, Kiwi Cad, similar picture. We had that close outside on weekly, which means that on daily, you'd be looking for a bullish impulse candle through the course of this week. So I don't think we actually got that last time. All right, so that's our currency pairs. Let's just have a quick look at gold. Likewise, we've just had a couple of overlays, both of which have worked, in fact. So quite happy with that. Both of them, actually the first one just hitting a really small take profit, but the second one hitting the full take profit. So that was quite nice. And let's just have a quick squiz at weekly, which has been updated. There you go. So nothing happening there. This is really, this triangle is just getting tighter and tighter. Okay, last one, in fact, is not visible on this. So yeah, all right, let me leave that then. Folks, that's pretty much it from me. Once again, if you do have any questions for me, please do drop them into the comments below. For those of you who could make it today, thanks for attending. I will be with you guys again later in the week for some training. So please do look out for the announcement for that. Guys, have a great trading week. All the best from me, and I'll chat to you soon. Bye for now.